G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 14th of December 2018. Not long to go now until the holidays. We've had the ECB out of the way. That was a bit of a non-event, although I thought that Mario Draghi was actually quite dovish. The market didn't really take it that way, I guess, because maybe they thought he would, not end QE. But in saying that QE was responsible for, the lift in growth and inflation and those kind of things, he was pretty much saying that without it, Europe's going to struggle. And I guess that's the clear takeaway. So if policy and economic divergence matters, then that's a really important bull point for the US dollar. Perhaps not today, and certainly not until either 113 or 114.50 breaks. But that is the clear takeaway. A bit like earlier this year when the US dollar was under pressure and we had euro up at 125, and I kept saying I think it's going lower, I think it's going lower, I think it's going lower. Policy divergence matters. Blah, blah, blah. But what I guess people are thinking is that the Fed's going to be dovish next week too. And it probably will, in that I wouldn't expect to see 3 rate hikes for 2019. But as I've shared in Markets Morning this morning, Charlie Bolello from Pension Partners did a quick survey to 2015 people, and more than 50% think it's 0 or 1 hike in 2019. Now that may be how it turns out. But the reality is that's probably not what the Fed is going to signal next week. Certainly not what I think, anyway. So what have we got? We've got euro still in the range. We've got US stocks under a little bit of pressure. Soybeans rolled over last night. Doesn't look like the best end to the week, so it's going to be very, very interesting. Let's dive straight into the charts, and we can talk all about that as we go along. So we're going to get to a resolution soon, aren't we, folks? You look at this euro chart, you can see the wedge. It's getting tighter and tighter. If I show you what the weekly looks like, you can see that I won't take those off because we'll go back to that. But for the last 11 weeks or so, the euro price has been caught between the 200-day moving average and the 15 EMA, that's 200-week moving average, and the 15-week EMA on a closing basis. So for me, the parameters are 113.90, 114.50 roughly. So give it sort of 10 or 13 points either side and call it 113 or 114.60 are the levels that really get things moving again. So we'll see what happens. That'll be all about the Fed. Retail sales tonight in the United States are going to be very important as well, so keep an eye on that. In terms of dollar yen has got a bit of a wriggle on, and so we now approach this. It's only 2 touch, so it's tentative, but we approach this trend line at 113.73 is where the resistance is. Of course, there's massive resistance at 114.50.75, and if that was to give way, then, as you know, I'm talking about 118 and change. So keep an eye on that. It would be difficult to see, in a world where US stocks are basing but struggling, it would be difficult to see dollar yen roar. But we'll have to wait and see what happens. I'm just going to respect that line, and if it breaks, you've probably got 50, 75 points in it. And we'll see where it goes, but I'm respecting it at the moment. In terms of sterling, interesting. On the weeklies, it looks like a false break at the moment. We'll see where it closes tonight. Mrs. May's doing her best to get some sort of... Sorry about that. That's down at Business Insider in Sydney. That's some sort... she's trying to get some sort of commitment from the EU to be a bit softer on the backstop, or to be a bit more negotiable, I guess, is the best way to put it. The reality is, of course, that we'll have to wait and see what the outcome is. Martin Wolf, I've talked about it in Markets Morning, the written piece today. Martin Wolf has said up front that we're crashing towards a hard Brexit if folks don't get their act together, that is the political class. So those calls I talked about look a bit dodgy, don't they? But as it stands at the moment, we could run all the way to 127, sort of 10 on the dailies, and on the weeklies we could run all the way to 129 and still be in the downtrend. So there's plenty of room either side for this to move right here and right now. I've got a small short in sterling, same way I've got a small short in euro. In terms of the Aussie, it's stalling again in the 40s. It's walked it up about 10 points, but realistically, the last 5 days have been very, very quiet. Not a lot of catalyst. The Aussie underperformed copper and then has fallen back as copper has fallen back. Its correlation with euros not that strong at the moment. It's really just trapped in this range. It's kind of in an eddy while there's other things going on. And so, we'll be waiting for whether or not, even though it's not correlating with the euro on a sort of like a 10-minute basis or that kind of thing, we will realistically be looking to see if euro breaks out, and if it breaks out, which way that will inform the Aussie. Equally, though, I think I mentioned yesterday, if sterling does get a wriggle on, could sterling be something that really puts pressure on the US dollar? Because as sterling drags itself along, could it drag euro along and others? It's an interesting question. I have to wait and see on that one. As it stands at the moment, we've broken this tentative trend line. We could go back and retest it. That would imply sort of 73 cents or something like that. But wait and see. Retail sales out of China today is going to be very, very important. So we'll see what that is. Retail sales, industrial production, and urban investment, the triple treat. As it stands at the moment, it's not really going anywhere. Sort of 72.5, 71.60. It's just walking its way higher though, the battler. Day on day, it basically didn't move. Neither did CAD, as you can see there. Gone up a bit, gone down a bit. This trend line's still the thing to watch. Pardon me, I don't really have anything to add on that one. Kiwi's respecting this trend line. That's been in there for a little while now. Just walking its way out. I've got a short on Kiwi, and expecting it to fall at least to 68, maybe even a little bit lower. If stocks go off, which they may, then Aussie and Kiwi I wouldn't expect to do superbly. Dollar yuan. This is really interesting. I've mentioned in Markets Morning, the written piece today, that the PBOC Governor Wang said that the economy needs a looser policy, but he's got to watch out about the currency as well. So I would expect that data today to be quite poor, to be honest with you. And so on that basis, it's going to continue to put pressure. As I said yesterday, this is just in a big old box. I could see it down in the 670s. I could even see it at 669 on a medium-term basis, and then still trade 725 at some point in 2019. But for the moment, it's stalled. Dollar Sing, likewise, has stalled, rallied for 5 or 6 days, and then it's come back for the last few. Keep an eye on that. If Dollar Sing breaks higher or lower, that's going to be a big signal. Let's go commodities, and then we'll go to the stocks. Gold looks like it needs to trade 12.37, just technically. US dollar's okay, 97.10, so we're not far from a break and close at 97.70. That's still the key for me. So what I'm thinking here is that gold, unless or until it can get above that 200-day moving average, which is clearly important to gold traders, more important in gold and perhaps in soy than any other markets I look at these days. But that's 12.36. So 12.36, 12.37 looks like it's a reasonable place to get support. If it was to go through there, then you've got 12.30 as a level. It looks to me like gold wants to test lower. Silver's still in its range, so nothing to see here, as they say. Move along, please. Copper had an interesting night. It was bid yesterday at one point. Bid reasonably well too, but it's had a reversal. Now, that's not a big range, obviously, a little pin bar, but we now need to think about the bottom side, 272, 270. If it gets through 270, then it really could have a run lower. That Chinese data again today is going to be important. WTI and Brent really do look like they're trying to bottom. This is the best close for WTI and Brent in 6 or 7 days. And on that basis, when I look at that chart, if I look at my system, you could argue you've probably had a diamond. And on that basis, then, I'm thinking 55.88, 59.89. I'll probably go and buy some this morning, I think. I'll go and have a look at that. In terms of Brent, a similar kind of story, not quite the diamond that WTI has. What's going on there? Now, Khashoggi, the Khashoggi murder, the US Senate has, I believe, said that Mohammed bin Salman. Sorry, I've got this this wisdom tooth. I went and got some antibiotics. Got to get it out next week when everything settles down. The US Senate has said that MBS did actually know about it and was responsible for it, but that doesn't really matter that much. In the grand scheme of things, if President Trump's going to give them a leave pass. President Trump's got his own issues with Michael Cohen and that kind of thing. Chat that he's going to make Jared Kushner his chief of staff, which would be a very poor outcome for governance, I would have thought. But we'll wait and see. So basically, it looks like from a purely technical point of view, the IEA came out last night and talked about demand and supply and the continued growth of US shale. And that's the big question for the Saudis. The Saudis are apparently going to supply less to the US, obviously trying to goose WTI up in hopes of goosing Brent up. The reality is America doesn't need as much Saudi oil as it has in the past. But technically, they look like 23.6% retracements and probably 38.2%. Now, Bitcoin's falling out of bed again. It's dropping lower at the moment. 3343. I had it down in the 32s. So if I'm looking at Reuters at the moment, it's at 3.2. So breaking lower. 3,000 was my long-held target on a break of 6,000, as you know. So we'll see how that goes. In terms of stocks, I'm going to end up doing this faster than normal today, folks. I've got a very sore face, and I'm not thinking straight, so I'm not going to waste your time with gibbering. We're just in a range, but as you can see, it's a volatile range. You would have to get up and through the 15, so 2674, remembering the other day that we got our high about 2683. You need to get up and through 2674 and then 2698 to really turn the outlook. It seems to me it's really quite interesting when you think about it that President Trump is clearly worried about the stock market. He's doing everything he can to goose it higher, and so too are Navarro and Lighthizer and those kind of folk. But the stock market's not buying it, which is really interesting. So we'll see. And if the Fed is more hawkish or less dovish is probably the right way to characterise it, then that might hurt. But a break of the range, it's probably important for me to stress, once again, I have a 2,500 target over the next sort of 3 months or so. And then I have a 2,000 to 2,100 target sometime next year. Now, I haven't got a clue. I'm never one of those people that pretends to know time and price. That kind of, that's almost impossible as far as I'm concerned. Some people can do it, but I can't. And I'm a trader, so I'm not really bothered by when it gets there, just that it stays on track. Dow, similar story, big old range. Watch the lows. NASDAQ looks a little bit different, but still, you could draw that across there and that there. So maybe in a wedge for the NASDAQ, but not looking good. Got to substantially break higher and a good weekly close. Our market just keeps rolling over. Ever since 63.50 or whatever the high was, the SPY's just kept falling. Rally, fall. You could draw a nice little trend line there, and it broke. Nice little trend line, broke. Nice little trend line, broke. Nice little trend line, broke. Well, nice little trend line retest, break. And we've got it again here. So perhaps we're going to see those lows again. In terms of the DAX, that's the weeklies. You don't want to talk about that. That's for Monday. The gap has not been filled. So we'll see how it ends the week. But as I said yesterday, I thought the gap might be filled. Hasn't been filled yet. So keep an eye on that. I don't have a dog in that fight for the DAX at the moment. For me, 10,000 is the medium-term target. And I'm just, looking at that as my key levels. Right, so that's it from me. Retail sales in the States tonight is huge. We've got market preliminary PMIs already, even though it's only the 14th of December. So they'll be out. Then we've got the retail sales stuff and investment in China today. So that'll be a big number as well. So that's it from me. Remember, everything goes behind the paywall from Monday. And I hope that, those of you who are thinking about signing up do, because I'd love to have you on the journey. I'll catch you on Monday. Bye for now.